Welcome back to Strongman Personal Finance. We got a sponsored video today. That's right. Somebody paid me $50, and you can too, to get a personalized video. We're going to talk about the Lion. Rawr, I'm a lion. Rawr. The Lion Electric Company. This company, which is based in Canada, has some very interesting stuff going on and a very interesting history. That's right. Because a lot of these Canadians with their deformed faces that flop around like meat, they have some very interesting ideas about what is a good investment and what isn't. Especially pension funds and governments seem to love to invest in liberal garbage like EV companies that are going to save the world. I'm such a good person. Oh my God, Justin Trudeau's so hot. And it really disgusts me. So let's go ahead and investigate this Canadian stunk, the Lion, rawr, and see what it's all about. Now, the person that paid for this video, right, they gave me a little bit of backstory. So apparently this was big in Quebec, and the Quebecian, is that how you say it? The Quebecian, I'm from Quebec. Anyway, the Quebecian government invested in this company. And as you probably can guess, it's massively unprofitable, sheer diluting trash, and they lost a ton of money, right? So let's read this article, let's skim this article, and then we'll go look at the company. A tangled web. French people. Clears path for a connected company. Changes to regulation will benefit a small, untested company with ties to a minister in the I guess Quebec government. Quebec has wagered, let me zoom in again. A little bit more. Quebec has wagered $400 million that the answer to that question is yes. The provincial government has put up loans. Oh, we're such good people. We're going to save the world. Subsidies and quietly modified legislation to help Lion Electric. And you know what? It's going to be funny. You're going to see what they actually make. It's such a weird name for the company. Lion Electric to outperform its international competitors. Oh, yeah, you guys crushed it. In theory, it's part of an ambitious plan to reduce greenhouse gases, be a good person, and create hundreds of local jobs. Quebec's investment in Lion Electric has paid dividends for a business associate of the Economic Development Minister, Pierre Peekabo. The associate, Michel Ringain, owns 1.1 million shares in Lion Electric. Oh, so my buddy owns shares, and I, as the minister, Lucky Pierre, if you know what that means. Lucky Pierre has his government invest in it, and his buddy makes a bunch of money. Wow, what a good deal. He also happens to be the man that oversees millions in assets on behalf of Fitzgibbon. What a name. Fitzgibbon. What a freaking name, okay? So anyway, so basically the government of Quebec, it looks like, invested in this company because they wanted to change the world to be liberal and amazing and good people. I'm such a good person. And it kind of flopped. So let's go ahead and see what this company is all about. Here it is. Here's what they make. The Lion. Rawr. They make, looks like something I would get from Penske if I wanted to move my crap around. A dump truck. It's a pretty apt symbol for this company. School buses and public transit buses. Isn't this an awesome company? Okay. And okay, so they sell these are their products, the buses we just looked at. And then they have some services, like they have EV charging infrastructure, EV telematics system. Basically, I looked into that. It's basically a way for them to like track data. If there's a bunch of school bus drivers, it tracks everything you do. You brake too much. You drove too fast. Oh, my God. And it just, compiles information. Lion Grant, they help you look up, the people of the company help you find grant opportunities, government subsidies, both in the U.S. and the United States. Parts and services and financing, okay? That's basically what they do. Buses, dump trucks, financing, grant solutions, blah, 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 blah. Now, let's go look at the stunk, okay? Here it is. The Lion Electric Company. LEV, a.k.a. the future. You should have just named it AI, guys. Come on. Okay. Market cap, $427 million. This is a titan of industry. Revenue of 171. Wow. Still got a pretty high price to sales relative to other auto manufacturers. Net income of 89,000. They have net income. That's interesting. We'll see about that. Shares outstanding of 23 million, blah, blah. And it's a strong buy according to analysts. So we see this data on the left, and then we see the stock performance on the right. Now, if we go back to this article, when did the government of Quebec invest in this company? Well, this article came out May 13th, 2021. So this company was a SPAC. So we don't know, what the stock price was before it merged and became a public company. But I guarantee you they invested a lot of money into it, and the stock price has massively collapsed. This usually is an indicator that your investment was poor, okay? And this one is a very poor investment, okay? Let's go look at the numbers. Let's go see how this amazing company did that Le Gouvernement de la Quebec actually spent their money on. So first we look at revenue. Revenue's going up. Probably all from government subsidies. But they have revenue growth, don't man. So they have pretty impressive revenue growth, all right? Let's go look at gross margins. Oh, that's interesting. I see a bunch of negative numbers. Negative gross margins? So the cost of making the buses and dump trucks is more than the price that they're selling it for. A negative gross margin. Auto companies have 15, 20% gross margin, something like that, maybe a little bit lower. Negative. It's better than negative, though. I can tell you that. Operating margin, negative. Profit margin, negative. Oh, but they had one positive profit margin, which I guarantee you was some kind of accounting adjustment. I bet you it was a warrant liability. We'll see on the financial statement. I'm actually interested to see what that is, because I guarantee you, if you have a negative operating margin, but then you have a positive profit margin, there's some kind of accounting adjustment that's in there. Either it's interest income, it's some kind of tax benefit, or it's some kind of non-operating gain that makes your bottom line profit. So you cannot look at this company and say it's profitable. Even though it is on a GAAP basis, it's usually a one-time thing, okay? And then we have free cash flow margin, negative 158%. Need I say more? Okay? Let's go look at cash flows. Look at the balance sheet later. Negative operating cash flows, negative. Big capital expenditures, so they're burning cash in operations and in investing into the company and factories and blah, 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 blah. Shares issued, they're issuing shares. They're taking on debt, blah, 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 blah. Absolute, massive, insane clown stock. And the Quebec government, which is so liberal and amazing, we're such good people, put taxpayer money, it looks like, into a turd. But hey, it's Canada. Don't worry, this happens in the United States, okay? I understand how you guys may feel about this. So let's go ahead and look at the company's actual financial statements. The lion, roar, roar. This is the company's financials as of December 31st, 2022. So first, let's read the auditor's report to the shareholders and directors of the Lion Roar Company. We have audited the financial statements. In our opinion, the consolidated financial statements present fairly in all material respects the financial position of the okay. So it looks like the financial statements, even though they're going to be ugly, I can guarantee you, at least they're not, or there's a reasonable assurance that they're not wrong or misstated or inaccurate or fraudulent. Okay, that's good. So the auditors basically said, okay, the numbers are probably right. There we go. Raymond Cabot, Grant Thornton, LLP, March 9th, 2023. Balance sheet. Let's look at the balance sheets. The balance sheets. Okay. The first thing I notice, cash is down massively. It's down from $241 million US to 88 million. Where did that money go? Accounts receivables up though, so they're getting more sales, right? Makes sense. Growing revenues, growing receivables. Inventories are up. They're buying more inventory and they're selling more inventory. Sales are going up and they're losing money in every single thing they buy. And prepaids are up a little bit. So current assets, the big change I see here is there's a massive decline in cash. Massive decline in cash. I wonder what's from. Let's go to non-current assets. Other non-current assets, whatever that means, is up. Property, plant, and equipment. Okay, they made some massive investments in property, plant, and equipment. It went from 32 million to 160 million. Okay. All that government cheese money coming in. It's delicious. Right of use assets, these are leases. Basically, when you have a lease, you have to put it on your balance sheet. Okay, really no crazy changes there. A lot into intangible assets. Okay, whatever that was. And some money in, well, no real big change in contract assets. So overall, their total assets went up, even though they're cash flow negative. So I wonder where the cash to buy all these assets came from. I don't know. Went up. All right, liabilities, trade and other payables, 75 million. It's higher. I mean, obviously, the bigger the business, the more your payables are going to be. Current portion of long-term debt went down massively. So it looks like they paid off or more likely refinanced long-term debt. And they got some leases. So overall, their current liabilities as of December 31st, 2022 were 81 million versus current assets of 323 million. Okay, they're probably not going to go bankrupt within a year. Long-term debts, massively up. So you see how current portion of long-term debt went down, but long-term debt went massively up. Yeah, they took out a lot of long-term debt, okay? Obviously, the only way you could finance your business, if you're burning cash from operations, it's got to be debt or equity. Where else would it come from? The sky, dividends, leases up a little bit, nothing crazy. Share warrant obligations. Okay, this is where the gain probably came from. We're going to go read note 14 later, it looks like, okay? But basically a share warrant obligation, from my understanding, this is my guess of what it is the company has issued warrants, and with those warrants, which is like a right to buy shares in the future, if those warrants are exercised, the company's going to have to give out shares of stock. And the cost of those shares are basically represented in this account right here called share warrant obligations. And the company is obligated, if the warrants are exercised, to give out shares, right? Well, when the stock price goes down, the cost of that warrant obligation goes down as well, because you may potentially have to give out warrants at much lower prices. So the cost is much lower. So even though the company's profitable, it's probably because of this massive decrease in liabilities. I'm just saying. And usually if you see a warrant obligation go down, I've seen this in a lot of balance sheets, that means that the stock price is massively plummeted, okay? But it's a profit because you owe less in warrants. Wow, what a hero. Okay, let's go look at the equities section. Share capital is up. They're issuing shares. What a shock. Contributed surplus, that's part of share issuance as well. Deficit went, they had a profit from share warrant liabilities. And cumulative translation, oh my God, what is that from? That's interesting. Okay, so overall, their equity went up. So basically, they made a profit from warrant liabilities, and they issued stock. Okay, very impressed here. Very impressed so far. Let's go look at the income statement. The statement of comprehensive income. Because think about it from common sense. Okay, let me turn my fan on. It's freaking hot in here. Let's talk about common sense here. Revenue is 139 million, or was, for the year ended December 31st, 2022. Their cost of the stuff they're selling was 152 million. They had a gross loss of 12 million. How else could they have gotten a profit besides some one-time non-operating gain adjustment? Obviously, this company is massively unprofitable, okay? That's why you have to look at everything, not just, the bottom line profit, it's good. It's like, Pelletier, they have a lot of interest income, but that's not part of their core operations. That shouldn't matter. Lefebvre, interest income. Okay, so gross margin is negative. Admin expenses are down, though, and selling expenses are down. That's good. So they actually cut their operating expenses pretty significantly, but they still have an operating loss of $80 million on 139 million of revenue. Negative gross profit. Basically, they're spending more on the stuff they're selling. The cost of making the stuff that they sell, the buses, is more than what they're selling it for, which happens a lot with growing companies, okay? It's not the end of the world, but it does mean the company's going to be losing a lot of money, and it's going to need additional capital. I wonder from where. Finance costs down massively. Not sure what that is. We have to read the notes. Foreign exchange loss is up. Change in fair value of share warrant obligations, 101. So now if we have to give out stock, if our warrants are exercised, we don't, because our stock has crashed so much, our liability is a lot less. That's a big gain, right? Wow. They have a profit. Good job. Yeah, it's a clown stock, okay? And then they have a foreign currency translation adjustment. So that's translating currency from Canadian clown dollars to US dollars. So overall, do not get deceived by this net income, okay? You have to understand why. It's because of the warrant liabilities. Okay, here's the statement of changes in equity. So let's see how the equity has changed from 2020 throughout the year 2022. So they had 190 million shares at the beginning of the year. They issued 45,000 shares from stock options. Issuance of shares through at the market equity program, an additional 8 million. And issuance of shares during December 2022, offering 19 million shares. Oh, I love it. Beautiful, beautiful, beautiful. Share-based compensation, $12 million. Holy smokes! Okay, so their equity went up because they issued a bunch of shares, including an offering in December 2022. I wonder why. But they had a profit, guys, so it's good, right? Yeah, okay. And foreign currency. God, this is such a clown stock. Look at these. Oh, okay. So they had a profit of 17 million, right? Almost 18 million. A profit. It's a profit, bro. But let's look at the actual contributions. Oh, fair value and warrant liabilities is subtracted. It's a non-cash gain. Their cash flows used in operating activities, negative $120 million burned. Negative $120 million burned. And then on top of that, they spent an additional $129 million on property, plant, and equipment, and an additional $78 million. So they spent hundreds of millions of dollars. Cash just flooding out of the business. Where's the money going to come from? Let's see. Increase loans on research and development tax credits receivable and subsidies receivable. So they took, it looks like, I wonder if that means they took so sometimes you're like, when you're about to get a tax credit, right? Like you think you expect to get a tax credit, and there's these companies that come in, they're like, well, if you want to get your tax credit now, we'll loan you some money, and then you pay us back when you get your tax credit from the government. That's what it looks like that is right there, which is interesting. I don't know, why would you do that? I guess if you're desperate for cash. Repayments of loans on research and development tax credits. Yeah, so they're taking out loans on their tax credits they expect to receive. Okay. Increase in long-term debts, $89 million. Issuance of stock. Is it not obvious what this is? This is a massive clown stock. Okay. And of course, that means a Quebecian or whatever. Quebecian blah, 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 means they invested in this company. Of course, because it's green, bro. Look at it, bro. You should buy the stock, bro. It's profitable. It makes profits. Yeah. I wonder if they reported that on the news. Oh, Lion Electric records profit because the stock price went down so massively that they had an adjustment to the fair value of their warrant liabilities. Oh, I love it. I love it. Foreign currency, blah, 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 blah. Let's see if anything else pops up here. Clownish. Everything here is clownish. There's so many notes. I wonder how much somebody would have to pay me to read all of this. Thousands of dollars to read this. Let's see. Okay, accounts receivable. Incentives and other government assistance receivable. So a huge part of their receivables is government assistance. This is such a clown stock. Look at this. Transport Canada Medium. U.S. EPA, school bus program. Ew. Quebec, ew, poor people with school buses? Ew, I drive my kids at school. Ministry of Transportation of Quebec. And other government assistance. A huge part of their receivables is from the government. Wow. You guys are so amazing. Okay, they're buying property, plant, equipment. Okay, cool. Let's see. Depreciation, lease obligations. Is there anything interesting on intangible assets? What are they buying? Separately, it doesn't even say what they're buying. Oh, here we go. Software development costs, dealership rights. Okay. Okay, that's cool. Interesting stuff. Intangibles. I'm trying to find the stuff about the whatchamacallit, the warrant liabilities. Okay, here's the long-term debt. I wonder what kind of interest rate they're paying. Let's see. Okay, loans. The weighted average all interest rate was 5.46%. That's actually not crazy high, I guess. But it's probably like a subsidized interest rate. Would you loan this company money at 5.46%? Really? Would you only accept that to loan this company money? What kind of clown would only loan this company money at 5.46%? I wouldn't loan this company for, well, okay, maybe 100% interest. I'd loan it to the company. Okay, loans. Oh my God. Let's see. Convertible debt. God, this company's a joke. Share warrant liabilities. The fair value of the warrant was determined by using the Black-Scholes option pricing model, taking into account the following assumptions. Okay, let's see. Yeah, so basically there's this thing called the Black-Scholes option pricing model, and that's how they value options, and that plays into like stock-based compensation expense. And all. I don't understand how it works, okay? I'm not going to pretend like I do. But it's like this very complex model they use to assign a value to warrants and options. And basically, if the stock price is going down, the underlying stock option is worth less. Obviously, okay? Obviously, it's worth a lot less. And you can see the stock price went down massively year over year, and they're recording huge fair value adjustments to the liability. I mean, obviously, because the stock is going down. So it's not good. I mean, I guess theoretically it's good because the stock that they have to give out costs less, but it's just an indication the stock price is going down. Oh my God. Public warrants. Public warrants. What is this? Is this owned by the government? I love it. Let's see what the public warrants are. Let's see if we can find that. Public warrants. Public warrants. Where is it at? German. The public warrants and private warrants issued as part of a business combination. The warrants are recorded at fair value. Maybe I'm reading that wrong. Maybe it's just warrants held by the public, like the market, as opposed to privately held warrants. Maybe that's what it is. But I guess the private warrants would probably be the Quebec government, actually, I imagine. Okay, so basically this company's a clown stock. What else do I need to say about this? Good job, Canada. Good job. You're so freaking smart. Let's see. Just found my new investment. Just sold my tattoo. Dude, what are you smoking in that? Dongman, will you analyze me for $50? I'd analyze you for free, boy. Bussies or buses? It blurs together all the time. Internet warrior. Long dated puts on a firm, 15 strike. Yes or yes. You do whatever you want, man. I'm buying VT. Let's see. I am sure Jeremy would love this company if you heard of it. It's profitable. Here's what Jeremy would do. It's profitable, and it's got massive growing revenues, and it's got a fortress balance sheet. He's such an idiot. Look at those profits. Man, I've never seen a growing electric company with that much in profits because of warrant. What's a warrant liability, huh? Interest income is a fraction of Palantir's total revenue. Come on. But it's a huge part of their profits. Don't worry. I'm going to talk about it. Don't worry. If you were the Quebec provincial government, would you invest in it for the future? Well, see, governments, they don't care about profits. They're clowns. They want to save the world. They don't care if it loses money. All that matters is it's the future. And it's green. And they will spend whatever money they have to do. That's what government people do. They don't care about losing money. So the government sucks. Lev, good short. I wouldn't short anything. Strongman, if you want 100% gain, you're probably better off buying Bitcoin than some rando company. I'll think really hard about that. Nah, I'm good. Black Scholl's model worked out very well for long-term capital management. That was a bunch of finance bro geniuses that had this company called Long-Term Capital Management, and then it just absolutely imploded. I think they were using like massive leverage. Oh, we're finance geniuses. Yeah, ooh, we're mathematicians. And then they lost all their money. They could have just bought VT and made more. Losers. Their investors are getting excited about a second manufacturing facility they recently built to increase production. They say it may justify a higher stock price. What is your answer to that? Well, if they have a second manufacturing facility, that's going to lead to more losses because that facility has costs. Obviously, they're increasing the costs of the facility, and those costs are going to be allocated to the inventory. And when they sell the inventory, those costs are going to be expensed, and you're going to see more negative gross margins. This is just more costs they're bringing on. Now, in the long run, it could work out, okay? But for a while, you're going to see massive losses, and you're going to continue to see debt issuance, and you're going to continue to see stock issuance because they're burning money hand over fist. They're not even making money from their operations. They have to issue shares like crazy. And now it's hard to do because the share price is in the gutter and the debt is massively down. Or their debt, interest rates are up. Excuse me. So, I mean, anything can work out, but you never know, man. Strongman, you're the reason I keep going. Thank you. Keep maxing your tax advantage accounts and buying VT. And one day you too will be retired. You'll be a rich man. What do you think about electric buses in general? I mean, I'm not against electric buses. Like I don't have like a bone to pick with electric buses, but investing in it at this stage, it's just speculation. You know, you're buying into this new industry that's going to be massively unprofitable. So that's my thoughts about that. It's only part of their profits because that's what you want to market as. I will wait for your. Okay, yeah. You should give me $50, man. I'll definitely do it. Hello. How do I 10x my hidden hooks? Just buy Tesla, bro. Nights at the truck stop are getting humid. It's getting hot. Well, as long as they get money fed to them from the government, they cannot fail. Does that make them a bit safer in the end if you buy the stock for very cheap? I would say probably not, because even if it keeps getting bailed out by the government, you're holding a company that's just burning cash hand over fist for the foreseeable future. Even if the stock goes up, the underlying business is just losing money hand over fist. But I mean, like, anything can work out in the long run. But buying the stock now may not be a great thing. You're going to see a lot of, as a shareholder, you're not seeing a positive return. Okay, the stunk may go up, but the actual core underlying business is hot trash right now. And it's probably going to be like that for a very long time, especially if they're opening a new factory. I mean, that's just more costs. All right. Any last minute questions? I got something to do in 20 minutes. Oh, they're worse, dude. There's certain levels of clown stock. Like Tesla's profitable. You know, a BYD, I think, is profitable. There's companies that have like survived and have become profitable. But there's a lot of companies that are like massively negative. Losing money hand over fist. Wildly speculative. This is in the wildly speculative category. This is like massive clown stock category. The amount of losses they're suffering is out of this freaking world bad. It's just it's gambling buying this stock, in my opinion. Personally, I mean, of course you can make money one day, but I don't know. I would rather buy like VT or something. I just buy and hold Berkshire B. It's outperformed Vu, Shada, and VT. It's one company, man. Let's see. If you compare them to Hyliion. Let's go look at Hyliion. I need to do a video about Hyliion. Let's see how bad Hyliion is. I think Hyliion's way worse, dude. At least this company has revenue. Hyliion's just okay, yeah. This is probably doing a little bit better than Hyliion. Hyliion's profits are like, they have like zero revenue. It is the biggest joke of a stock I've ever seen. That's why it's popular on YouTube. So yeah, this is not on the same level. Hyliion's like the clownest of the clown. Okay, this stock is like clown stock, massive clown stock. And then you have like, then you work your way up the chain. Are you going to wait for Palantir to go down to make? No, dude, the Palantir is down since I've been talking about it. If you think the government is run by clowns, why do you only buy assets that run on government-controlled rails? VT or the VTF is a bunch of private. I mean, like the government's intertwined in every country. Okay, you can't avoid the government, but they're clowns. They're just, you have to live with them. You ignore my comment. You shameless. Let's see, guys. Shada is outperforming VT. My ET. What? Pay me money and I'll make a video. If you use your valuation model on LEV, you can't. It doesn't work because the model assumes that there's profits, right? And you're discounting the future cash flows at the market rate. If you use the model, which basically is just everything monies, if you use that, you would just get a negative share price. It would be worth negative money. So like the model doesn't work. It would be negative. It'd be less than zero. So it just doesn't work. Would you value them on it? I wouldn't even do that because they're burning assets. It's like, let's say I have $1,000 in my bank account, right? And every month after all my expenses, I'm spending $200 more than I'm making. You could value me at my assets. I have $1,000 in cash. That's it. So am I worth $1,000? Well, every month I'm losing $200. So the next month I'll have $800, then I'll have $600, then I'll have $400, then I'll have $200. So you can't like value me based on my just the amount of cash that I have. Like that doesn't work with this company. This is a wild speculation. Basically, you got to really think in the future if this company is going to somehow survive and be willing to hold the stock forever and all the dilution events that are going to happen and all the debt issuance and the potential for bankruptcy. You have to weigh all that in to potentially possibly make money off of it. I just don't like that. It's not my type of investment. Some people say Bluebird is a better stock. They also make, what do you think? I'd have to look into Bluebird. I don't really know. They are heavily subsidized too. I'd have to like do a whole nother video on that. Dogecoin Douchenaire can probably box. All right. What? Come on, Anton, get it out. And I'm closing this video. I got somewhere to be, guys. Imagine, Strawman, if you started an electric something company, the government would subsidize you, and you would be a... I should. I should. No, I'm just a boring accountant with a small YouTube channel. I'm just a loser. All right. Well, that's it for this video. I enjoyed making it. I love, like, these stocks are just easy to look at. You know what I'm saying? Let's see. With VT, what implications does it have with currency conversions? That would have to be a full video, man. Strongman reviews. Okay. All right, guys. Well, that's it. Talk to you later.